We got a lot to go over today. Let's just jump right into it. This is Money Never Sleeps. Welcome back to Money Never Sleeps. Before we get into anything, nothing I say is financial advice. I'm not a financial advisor, just a guy who likes talking about the markets, sometimes joined by two intelligent friends that give their takes on the market as well. Nothing we say is ever financial advice. Do your own research, talk to your own financial advisor. It has to be said. I'm very much alone today. Joe out traveling, and I just kind of we weren't supposed to do a show today, but I just wanted to do a quick update considering we got some major news out of Asia, and I think it's really important to cover. And I think I have a little bit of time today to just jump into that and discuss what I'm seeing. We're going to talk a little bit about the Japanese crisis. There's two on the horizon that I potentially see causing problems here in the U.S. I also see that tomorrow is OpEx, so markets are doing a little bit of a weird push and pull here. You're seeing a bit of a spot, getting out of the positions of spot. Meanwhile, I think contracts are doing pretty much the opposite. They're just holding to see how long they're going to be in the money or out of the money, right? We got oil. We also got crypto we can go over a little bit too. It's been kind of boring. We've seen it pull back. The alt pull back a few days ago. Interesting, but let's start with what I think is the most important thing. I'm going to share my screen right now. We're going to go over to Japan because this is a bank that for a couple of weeks, we haven't talked about it on the show, but I've been keeping an eye on the news around it. Was seeing some pain, and this is from Nikkei Asia. Japan's Norinchukin, forgive me for butchering that name. There's a reason why I wasn't bringing it up. Obviously, I couldn't pronounce it, and I didn't want to seem like an idiot. But Norinchukin Bank to sell $63 billion of U.S. and European bonds. Why is this important? Well, if we look at the byline right here, bank's fiscal 2024 loss expected to reach a record high of $9.5 billion, and that is not in yen. That is 100% in USD. Why is this important? Well, about $50 billion worth of those bonds belong to the U.S. So now, once again, the two largest holders of U.S. debt have been offloading for the past 7 to 8 months a significant portion of that debt exposure. And so now we're looking at the U.S. once again, seeing that these yields are going to be problematic for the foreseeable future as long as rates remain elevated. But people are willing to take a major loss on some of these, on a lot of debt. And that's not a good thing for a country to see, right? We need debt to operate. And because we have raised rates so high, the creation of new debt in the system just doesn't exist. So people are offloading bad debt that they had from, 2021, or they're pretty much just running low on money, and they need to make sure that they have capital on hand. And we're starting to see the nations kind of falter here. But this is really interesting too. Let's go a little bit into it. They will sell more than 10 trillion yen, which is $63 billion of its U.S. and European government bonds during the year ending March 2025. So yes, it is a really important thing to make note of that. It's within this calendar year of the 2025 March to March. My thing is, it could come at any time, right? This could be something that could happen next week, right after OpEx, and then obviously there's panic in the system, or it could come as late as March 2025. My guess is if they're doing this sooner rather than later, they probably need that capital and are willing to take that loss. But in taking that loss, that does create a bit of a fire sale for some of these bonds. You could probably see yields, if this happens all at one time, you could see yields, skyrocket. And then that kind of tells you that this bank might be hurting more than people are probably aware of. The company's net loss for the year ending was 500 billion yen, which rise to 1.5 trillion yen with the level of the bond sales, right? A lot of what they have too, which isn't explained here, but they have exposure to CLOs. They're an agriculture bank, but they have huge exposure. I believe 357 billion. I have to find that number, but they have an insane amount of exposure to CLOs. And we were talking about how those are bad, right? Asia, especially bad because we know that in China, the property market's pretty much at a standstill. No one's buying property, everyone's buying gold. And if that's the case, then, some of those bonds, some of those loans on properties are probably going to go bust if no one's buying into it at all. So it's going to be something that we're going to have to keep an eye on. But this is really important because what happens if they sell off all this debt? Well, that just means that there's less debt for the U.S. The equity market's at all-time highs right now. If something bad were to happen, guys, and again, I keep saying that because I'm open to the possibility of something possibly breaking in the system and something that could potentially be I would say, the wide known root cause of it could be something completely, unrelated, to the point where it's like, well, this is a perfect time to, bring some of that money out of the equity markets and put it into the treasury markets and, into the bonds. And I believe that the U.S. debt market will see a huge inflow from the equity markets, but to the extent, it's probably going to be pretty catastrophic. I sent out a tweet earlier today saying that the monetary system is nothing like the equity markets. You can apply logic to it. You can see what lies ahead. And it's true. We're seeing a lot of things very similar to this that could potentially, I say, because obviously equity markets haven't necessarily made sense for quite some time. The monetary system obviously is in a very fragile state right now, not just here, but in other countries as well. I think the United States, again, is the last resort for a lot of the equity markets. Maybe Germany as well, if we're looking at the DAX, but we're not the only ones that are seeing some pain. And what came today was the Swiss bank also announced that we're going to get another surprise rate cut. So now I believe their rates are at 1.25%. Why are they cutting rates? That's something that we have to continue to ask ourselves. If they're continuing to cut rates, we're seeing these banks willing to take major losses, and not just in their debt department, but also in terms of some of the loans that are going bad too. And I mean, like foreign debt department, obviously, the commercial real estate debt that they have exposure to is catastrophic. They need capital sooner than later, and with Swiss also cutting rates today, Switzerland, you kind of push the dollar up a little bit more. And if we want to see what the fallout of that is, let me pull up the Japanese yen, because this is, the second part of that crisis I was talking about, is that the yen carry trade could reverse fairly soon. The last time we were here was in May, and we shot to 160, right? We got this really nasty wick up here, and then they intervened like fucking crazy, right? And they spent this is the Bank of Japan I'm talking about now. They spent a lot of money to get from 160 to $1 all the way down to 151 to $1. And that was in a matter of days. I didn't do a show that was a week. I think House and Jay were doing the shows, but since then it's climbed right back to pretty much right where it was. So what happens when we get here again? Is Japan going to do the same exact thing? Or are they going to raise rates? Something's got to give. This is all kind of coinciding at a really fragile time, not just for Asia, but also for other, central bankers who are cutting rates right now. This is problematic because with them cutting rates, it meant that the dollar gained strength against the Swiss franc, I believe, their currency, and it caused the yen to also lose more value because of that. So the dollar continues to stay the strongest asset in terms of currency, which is wild because, it really hasn't gone up too much since this height in April of this year, right? I thought that this was a bull flag. I still believe it is, that it's going to break out of that, and we're going to probably see the appreciation in the dollar moving forward. And the reason that is because the monetary system is pointing to the fact that there is a dollar shortage. This bank in Japan is proving that, and you're going to start to see a lot more fire sales. And I might have been wrong about the timing, but when we're talking about the monetary policy and everyone's saying this time is different, it's never different. That's the thing that we have to keep in mind. Timing, always going to be fucked up. This is definitely probably the most shady next few months in terms of just trying to keep things elevated, OpEx into OpEx into OpEx. And I mean that so because companies are doing these stock buybacks. We are going into a blackout window. If not, I think it might have already gone into it last week. That's why Apple was buying like crazy into Friday of last week. So if we're in the blackout phase and we know that 0 days to expiration contracts are kind of expiring for the next month or so, you're not going to see that. You're starting to see these rate cuts. You're starting to see these banks kind of do these fire sales. There is an argument to say that there's a chance we could see volatility, not just volatility, but the dollar also rise fairly significantly. And then if we look at world events, what's going on right now? Well, we have some problems that are going on in Europe. France is in absolute shambles right now. I think that's fair to say, considering that they're going into the Olympics, right? And then the entire world's going to be watching. Yet their type of instability that we're seeing is also hurting the euro. I mean, we already know the euro is going to hurt right now because the ECB is cutting rates, but continue to have problems like that around the world, you're going to see these currencies devalue and the dollar is going to go up. Now, if we can switch over to oil and talk about what's going on there, that's something that's going to be very interesting because oil, obviously, the U.S. Saudi petrodollar agreement, it seems like that's going to happen. The fallout of what happens with that, obviously the dollar not being the settlement. What does this mean for other currencies? I think a lot of people think that that's going to cause the dollar to go down. In my opinion, I think it's going to hurt other currencies and it's not going to hurt the dollar. Demand is also something you have to keep in mind during this time. I think that there could be some ramifications in the future, but when we look at this right now for the dollar against other currencies, BRICS, we talk about maybe that's one of those currencies to be the one that pretty much takes over that trade, and it's where settlements are done for oil. Maybe I don't buy that one bit. I think what is more likely to happen is that we see more demand come in for the dollar and the dollar gets stronger off of this because other central banks cut rates. And because of that, that makes their currency, the pairing to however those deals are settled, weaker. The dollar right now, I don't see a world where this is not the strongest currency outside of, it is the strongest currency in my opinion for the next 2 years or so, given what we're expecting. And I say 2 years, that's a 2-year window, not necessarily it's going to be for 2 years, it's the strongest currency. No, I think that it's going to be the strongest currency because the monetary system is telling us something completely different. It is telling us that, the dollar is in a shortage. So supply demand, very similar to the same things that caused inflation. There was low supply, but high demand and people had money, prices shoot up. Here, low demand and everyone wants dollars, it's going to cause the price of the dollar, or at least the strength of the dollar and the index, to go up. So that's kind of what we're facing here with, the Saudi US petrodollar, going into however this plays out. I can't tell you how this plays out in, years or so. Maybe it goes back to being, the settlement, the currency for the settlement. I just don't see this being the case, though, right now, causing the dollar to go down. I think the dollar remains strong here. I think other world economies, other central banks are in really bad shape. I think every central bank's in really bad shape right now. And just to the fact that we had a really weird past 15 years or so. And I think a lot of the ramifications of 2008, how that was dealt with, printing money, gets to the point where now 70% of the economy, which is, consumers, retail, are in a place where they can't spend money. And now you're starting to see that a lot of these banks are feeling the effects of people not having that money because they're either spending it, the reserves are going down, no debt's being created. This is what happens when you get used to, constantly seeing money flow into the system. Now it's gone. It's problematic. It's not just problematic for everyone. It's a top-down, bottom-up scenario. So U.S. oil, it can go either way here. I just want to bring up the dollar, that correlation that we're seeing. We got a death cross, and now it rallied right through it. Now we have to question, is there anything that could push this dollar up? Push the oil up. I definitely do. I think there is a couple of things that could push it up. I also think that there's a more logical thing that could push this thing down. Logical thing is demand, right? We continue to see layoffs happen. I believe today we had another jobs report data too, talking about how people are having trouble entering the labor market. Not surprising because hours are being cut. So that also means that manufacturing and production is being cut as well. And you would think that that would also bring oil down, and it definitely should. But the problem is, what are we we're waiting for that to actually that shoe to fully drop. Looking at this here, this looks like a bull flag to me. I mean, it could continue to break up, could go back to 80, could even go back to 93 and get a double top here. And what we're seeing is, panic. Something in the world causes panic. Supply, demands, issues, escalation of some sorts or something like that, uh, causes it to go back up here for a momentary period of time. And then if that's the case and it doesn't, and it causes something else in the system to break, maybe more layoffs, then you could see oil just absolutely do what it did, and very similar to 2020, just drop significantly. And it's because demand just dies off. It did the same thing back here in 2008. Let me just go to it. We can get another little blow off top, and then, or even just here, just a little bounce, and you see what happens when demand dies down. And this is on the back of everyone losing their jobs. And as a reminder, a lot of people lost their jobs still from 2009 all the way to 2011, especially in the US and especially in Europe. I believe during that banking crisis they had in 2011. So this is going to be very interesting to see how this plays out. I think this is a continuation pattern of a much larger structure. I do think that if escalation were to happen somewhere, there's a good chance we could go back to 93. I also think that it's very possible that we are looking for long term to see this oil drop significantly. So this is something that we're going to have to watch after this OpEx and see how it plays out. So definitely oil is going to be very important. Let's take a look at TradFi. TradFi is stupid. Nothing I can say there, right? All-time highs, very close to it. S&P continues to keep climbing and climbing. We're down about 4 points or so in the S&P, down 120 in the NASDAQ. I'm not concerned with that one bit. I'm not in the camp that thinks this is sustainable one bit. Obviously, you guys know that. Tons of gaps in between, far away from the 50 and the 200. The interesting thing is that this yellow line right here is the OpEx. I'm going to delete it because we know it's coming. But, demand, you got overbought stochastic RSI on the daily. You got volumes that are dropping. Let's look at this on the weekly. Yeah, volumes have been dropping significantly from this height in December. Let's see if I can get a little trend line going there. Yeah, as prices are pushing up, the divergence in that is still problematic for me to the highest extent. We also see that the weekly stochastic RSI is getting to a point where it's going to be close to overbought once again. If you look at the monthly, I'm surprised this weekly stochastic RSI is not overbought already. Monthly is completely overbought. And again, volume coming down as the price is pushing up. This doesn't end well. Not in the slightest, in my opinion. Again, monetary policy, that's what we're following right now. How debt is created, destroyed, rates, that's the focus for the time being. It's not, price action. I think price action is very manipulative and can fool you into thinking that everything in the system is okay because the price is up high, which means that people are feeling good about the market. You could feel good about the market when it's at the all-time low. You can feel terrible about the market at the all-time high. It's sentiment in equity price doesn't correlate to anything, in my opinion. That's why we're not doing as much TA in terms of this is going to be, where the price will be going. I think we know where price is going. It's just we can't tell you exactly when because we just don't know. But when we look at these patterns, this is one that is very important. And the VIX is actually doing extremely well today. It's up 5.45%. And why is this important to me? Because it tells me that some people might be front running what we've been talking about for a long time. And we're in the breakout period of an extremely violent push to the upside in the VIX. Now, it could come next month. It could come the month after that. It could come the month after that. I think within the next 6 months, we're right back to creating a new pattern for the VIX. And that's my opinion. It's been crushed and compressed for such a period of time. This is a 4-year cycle. March of 2020 all the way to June of 2024. That's 4 years. If we look at 2008, that lasted roughly 6 years, 6-year cycle before it popped out again. This one here, 2 years or so. And then the one that led to 2020 was from March of 2018 all the way to about February of 2020. So 2 years there, but we're in a 4-year one. And I think things are significantly worse than they were back here in the 2019. Once we started seeing those rate cuts, things started to push up a little bit more, but eventually we did get that volatility spike. Something came up. You guys know what it is, but it still is part of this pattern that we've seen throughout history for the VIX. Now, this is the thing that's going to be really interesting about it, is that the reason that the VIX probably will pump an insane amount is because the S&P has to pull back. But what causes the S&P to drop? Well, it's probably going to be something like Apple uh, taking a major dump. It's probably going to be something like NVIDIA taking a major dump. I mean, NVIDIA today, major dump in terms of percentage, right? It's almost down. I mean, it's down $3, but if we're looking at this relative to where it was before the split, it's down about $30. Nothing that's a chump change if we're looking at this in the grand scheme of things. Nonetheless, this still is the wealthiest company in the world. We're going to have to see if they can sustain it. I don't know. This is very similar to Cisco. I believe JWeb sent me in-house, or someone sent us a tweet of how Cisco momentarily passed Microsoft as the world's top company. It was like March of 2000. Just got that that headline the other day, so we'll see if that plays out. But I'm very confident in believing that rationale will come back into this market, and this is going to be the one that causes the VIX to absolutely just spike up. I think this is the one that crashes the S&P in tandem with Microsoft, obviously, and Apple. Apple is stupid right here. This buyback gap that's here. I'm fairly. I won't say that. I take that back. I'm excited to see what happens here. But between this price right now at 210 and 199, because once OpEx ends, we're in the blackout window. There's a chance that little gap could get filled. There's a chance. Obviously, if people get excited and there's more money that comes out of nowhere and the price pushes up, so be it. That won't get filled, but it's a major gap that you have to keep an eye on because there's no support in this area. So what happens when you push into all-time highs? So you're going to have to find support somewhere else, and you got a triple top right here, even a quadruple top if you want to consider this. So your support is definitely going to be around $200 for that. Outside of that, I'm feeling pretty good about the state of the market. It doesn't necessarily make sense that to be this bearish and think that anything bad is going to happen. This time's different, right? Because prices are so elevated and high, just remember that tomorrow's OpEx. People are taking profit in spot, still holding those contracts into tomorrow, playing with other people's holdings of stocks. Let's go into crypto and just wrap it up there today. But, crypto's holding pretty good here at 65K. Bounced off. It's very close to bouncing off this. I mean, we can even say that like that still works technically. That support going to be between the support of this trend line and also the 50 moving average. It's going to need to break above the 50 moving average to get people excited. There's no maybe it's tomorrow, maybe get a good green candle and it pushes up and that kind of brings people in the money for the time being. Crypto looks weak to me, and that's just across the board. I'm not saying that just Bitcoin or ETH. I do think that the ETH ETFs will be trading before July 4th. I think that's a fair assessment, especially next week. We're probably going to see the debate. I think that would be a great topic to see both candidates talk about, and there's a good chance that maybe it goes live in time for that. I know the SEC isn't suing the Ethereum Foundation anymore or going after ETH for anything, so it's somewhat more bullish in terms of getting the ETH ETFs going. Keep an eye on that one, but alts still shit across the board, still shit. You can say that you can argue that there is a bit of a bounce that's due here, but you're getting death crosses. We did that the other day, but we're looking at the pattern, and I'm still just not sold on this idea. You're trapped between the 50 and the 200. I believe you're under the 200. Oh no, you're above the 200 now for the total 3. So this could be another thing where you just kind of test the 50 moving average one more time, get one little last rally. And then if that doesn't hold, then I think that people are going to start getting scared across the board. Bitcoin's also going to have to make a decision too, whether it wants to go up or go down. I can't necessarily say which direction it's going to go in, but I do think that it's going to be exciting nonetheless. I think we're going to see lots of liquidations. It could be rapid up and down, but yeah, I think that's a good place to kind of wrap it up in terms of crypto. Nothing really too much. Maybe tomorrow a little bit more upwards pressure because of OpEx. People get excited, but like I said, after this OpEx, it's kind of no man's land. I'm very much concerned about how the market will react in this blackout window. I'm also concerned to see a lot of the things that are coming out of Asia, right? And again, it's not just Asia, but Asia is a huge player in this, both China and Japan. We have kind of some instability globally right now, and we know that there is instability in financial institutions for the most part. If we look at the monetary system, just the way that debt isn't being created like it once was. Rates need to be lower for people to borrow and for it to make sense for them to pay back on that borrow. Banks are, think about it like this: during the pandemic, with all that stimulus and rates at zero, people were able to take that money, put it in the market, make a lot, pay back their loans, right? 5% gets a little bit dicier up there. So until those rates start to come back, there's not going to be people borrowing, which doesn't create any more money into the system. And because of that, you're going to start seeing a lot of these companies kind of strapped for cash. And that's what we're seeing with Norinchukin Bank. I can't pronounce that at all. The Japanese bank that is selling off all that debt. Anyone who's got exposure to it's probably going to also do it too, because if someone's selling off their debt, their value is going to go down. And if they have anything on the books with them, or any futures, derivatives, stuff like that on their books, well, obviously they're going to try and get out of that as well. So it's like a burning building, and all the rats are trying to get out, but there's only one door, one exit. That's what it feels like. Other than that, have a great weekend, guys. I think we're going to wrap it there. We'll be back Monday. Should be back Monday. We're just busy working. Practice what we preach here. I do still believe that working right now and not necessarily playing the market has been the most beneficial thing for me. Like I said, the equity market doesn't make sense. And that's something sucks to learn sometimes, but I don't think that we'll be in this period for some time, probably years, decades. Once again, I just think that the way that everything's played out these past 15 years has kind of set up the perfect storm for something quite catastrophic. And I think that this is probably the most difficult market that some of us will see in our lifetimes. That being said, there's still things you can do to protect yourself. Obviously, you do your own research and all that stuff, but it's never a bad thing having capital ready to deploy if something were to happen, in order to obviously get a great entry point, or an entry point you feel is a great place to get into the market. And that's honestly how I feel right now too. Sometimes doing nothing is the thing that'll save you the most stress, heartache, and work. And right now, I just feel like doing less. I'm enjoying the summer. I hope you guys are too. Good luck to everyone tomorrow. We're not going to be back. We'll be back Monday, and just make sure that you are enjoying life outside of this, because the market really does suck, and it's not worth looking at the screen all day. So take care, everyone. We'll see you guys soon, and yeah, later.